periphery a decade ago.
Rich,
well, I'm just saying the challenge for many European countries is the countries they'd like to invest on don't have a lot of debt outstanding, like Germany and Switzerland, and the countries that want to borrow have to pay a big premium. So, yeah.
I want to cross back over to Matt Lazzetti. Matt, just before you run, what's the best way of getting the chairman to answer a question about the election without answering a question about the election? Because that's all every journalist on the planet right now is thinking, and every single journalist in that news conference will be trying to do.
Yeah, I think it's a really difficult one. I think at the moment, Chair Powell has really no incentive to answer any question about what fiscal policy is going to look like. There's so much uncertainty. I think he's going to emphasize data dependence. I guess if you could do it through a few avenues, it would be one, how are they thinking about risks to the outlook as they look ahead, in terms of the policy outlook? That has to factor into how they're thinking about things. Two, I think it was interesting at the September meeting, he noted that the neutral rate has risen, quote unquote, significantly relative to the pre-COVID levels. And I would, just kind of think, if we're getting additional fiscal stimulus on that, how would he view the outlook for the neutral rate as evolving in that type of environment? But to be honest, I think it's difficult to get kind of a solid answer from him about what the election could mean for the outlook at this meeting.
Matt, appreciate your time, sir. Matt Lazzetti of Deutsche Bank. About 3 minutes to go until this
What's up, traders? How's everybody doing on this fantastic Thursday?
What would you lean into in this news conference? If you were on the other side asking the questions, what would you lean on?
I think I'd ask the chair about...
You can't just Google.
I hate YouTube and their commercials. We're going to see if we can pull up the live stream here for a minute. Here in just a minute. So Bitcoin is obviously broken out to fresh all-time highs. I mean, it looks okay. A lot of volatility yesterday. We're going to see more volatility more than likely today. I would love to see bullish continuation, but yesterday was a massive candle based on the election. The one thing and the only thing that I really don't like with this market going full tilt like this is the bond market. I wish the bond market would, start to be a little bit more bullish, because as long as the bond market, especially the long term, is super bearish, then that's going to put downside pressure on some markets. But we're not, like I said on Saturday's upload, we're not seeing, or Sunday, we're not seeing literally any markets that suggest we're going to see a recession or even higher inflation. The market's not currently positioned for that. So here's the ES futures down here on the daily time frame. You can see that we pulled back last week. Had a fresh monthly open, staying underneath the monthly VWAP right there. Broke out to the upside yesterday's election, breaching and making fresh all-time highs. You still have not made a fresh all-time high on the NASDAQ futures. As you can see right here, the all-time high on the NQ futures is 21213.25. We have not taken that out yet. As soon as you take that out, this bubble will come from over here to over there. Here's oil down here. Oil, I mean, obviously looks pretty good, and the XLU down there. So we're just waiting to see what the Fed has to. I mean, we already know that they're not going to. They're just going to basically cut 25 basis points. So let's see if we can get the actual thing going here.
Miss Hall,
The decision is a tricky one.
My big takeaway is that the Fed removed the reference in their statement to gaining confidence on inflation at the same time that our esteemed panelists are talking about opening the door in December to either not cutting rates or potentially going forward and maybe not cutting next year.
Are you ready for a 45-minute clinic on how to not answer questions? Are you ready for this?
I actually am so excited.
Right?
Is this a certified
That's
snoozer?
literally exactly what's going to happen. He's going to read everything we already know, and he's not going to answer any questions. Beautiful.
No, absolutely not. tension's going to be pretty wild.
I think it's going to be one of those news conferences. And
Bitcoin has pulled back from the
where you have a sheet
current
of paper in
and
front of
near-term
you,
all-time
you've got your
high.
notes written down, and every time you get that question, 20 different versions of it, that sheet of paper comes up, and you read it verbatim. And hope.
But I mean, this is a very shallow pullback. Bitcoin's
Jay
only up
Powell's multiple sheets and someone asks the question, you see
0.8%
him
as of right
going
now
through the papers.
today.
Wait,
So it's
okay,
not
there's
up
the answer.
huge today. Yesterday it was.
The answer sheets for the chairman.
Not today.
I participated in discussions of press conference briefings, yes.
25 basis point reduction over at the Federal Reserve. Here's the chairman, Jay Powell.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and
What's
stable
up, everybody?
prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has eased substantially from a peak of 7% to 2.1% as of September.
All right.
We are committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by 1/4 percentage point. We continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments.
I mean, if you're looking for shorts on Bitcoin, just trying to play the daily range, I mean, you're below yesterday's high.
GDP rose
If
at
you
an
start
annual rate of
closing,
2.8% in the
intraday
third
candles
quarter,
above that, you might want to
about the same pace
change
as in the
that
second
position.
quarter.
We've been bullish on Bitcoin
Growth
for
of
2
consumer
solid
spending
years.
has remained
We have not
resilient,
changed our bias no
and
more.
investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 104,000 per month over the past 3 months. This figure would have been somewhat higher were it not for the effects of labor strikes and hurricanes on employment in October. Regarding the hurricanes, let me extend our sympathies to all the families, businesses, and communities.
I don't have any thoughts
who have
on
been
DXY right now.
by these
It's
devastating
doing
storms.
the wrong thing.
The unemployment rate is notably higher than it was a year ago,
DXY should
but
be
has
bearish
edged down over the
inherently
past 3 months and remains low
macro.
at 4.1% in October. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed.
We just hit
Overall,
6,000
a broad set
on
of
the
indicators suggest
ES
that conditions
futures.
in the labor market are now less tight than just
$6,002.
before the pandemic in 2019. The labor
Or
market
not
is not a
just, but we
source
did
of
today.
significant inflationary pressures.
Right there.
Inflation has eased significantly over the past 2 years. Total PCE prices rose 2.1% over the 12 months ending in September, excluding the volatile food and energy categories. Core PCE prices rose 2.7%. Overall, inflation has moved much closer to our 2% longer run goal, but core inflation remains somewhat elevated. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets.
There's where we be, 2.4% on the
Our monetary policy
inflation
actions are
rate.
guided by our dual mandate to promote maximum employment and stable prices for the American people.
It's obviously heading in the
We
right
see the risks
direction.
to achieving our employment and inflation goals as being roughly in balance, and we're attentive to the risks to both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by 1/4 percentage point to 4.5% to 4.75%. This further recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we move toward a more neutral stance over time. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity
You,
and
in a
employment.
sense, would want to see this little
Considering additional adjustments to the target range
range
for the
right
federal
here
funds
hold.
rate,
If
the committee
Bitcoin's
will
going to go
carefully assess
lower,
incoming data, the evolving outlook,
you
and
would
the
want to
balance
see
of
price
risks.
drop out of this
We are
area
not on any preset
and
course.
start heading
We will
down.
continue to make our decisions meeting by meeting. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation is not sustainably moving toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can move more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing
up,
inflation
Ajit?
sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans.
I
We
don't know that I
understand
would,
that our actions
because
affect
you just
communities,
made
families,
fresh
and
all-time
businesses
highs on
across
the
country.
NASDAQ. On the futures, you just made fresh all-time highs on the futures, on NASDAQ futures.
Everything we do is in service to our
I don't
public
know that I'd be
mission.
looking for shorts or
We at the
longs
Fed will do everything
necessarily
we can
here.
to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
All right, we're gonna look at his discussion real quick, but I mean, let me just show you real quick where you are in terms of the weekly expected move on the S&P 500. I mean, dude, you have blown this out. You had a 151 point expected move this week. You have exceeded that by a long shot, right? This ain't even the futures. Like, that's just the SPX. This would be closely resembling to what the futures look like right now. I mean, you're well above where you should be, where the option market is priced risk to go and all that. I mean, do you really want to look to short this? It's possible you could, but if I was going to short it, I'd probably do it with like way out of the money calls, way out of the money calls, and just sell them. And then, you know, make sure you manage that risk.
Thank you. Given the expectation that the election outcome will produce policies that would meaningfully impact the U.S. economy next year, how is the committee taking these proposals into account for upcoming decisions, including potentially the next one in December? And can you give us any more sense of how proactive or reactive the Fed is prepared to be to changes in economic policies?
High of day would be your
administration?
risk. That would be your stop
Sure.
loss.
So let me say that in the near term, the election will have no effects on our policy decisions. As you know,
Because you
many
just
things
made a
affect
fresh
the
daily
economy,
high.
and anyone who writes down forecasts in their job will tell you that the economy is quite difficult to forecast looking out past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess, we don't speculate, and we don't assume. Now, just in principle, it's possible that any administration's policies or policies put in place by Congress could have economic effects that over time that would matter for our pursuit of our dual mandate goals. So we, along with countless other factors, forecasts of those economic effects would be included in our models of the economy and would be taken into account through that channel.
Nick.
Oh, sorry, what broker? I use tastytrade. Just make sure when you sign up for tastytrade, you ask for permission to trade futures. I also use Charles Schwab. This TOS is from Charles Schwab. You can see, well, here, up here it says schwab.com. I mean, you can trade either one of these platforms are good. Either one, this one or Tasty. I have a small account on Tasty and my main account is on Charles Schwab. I would move my main account over to Tasty if Tasty was better. But since my internet connection is terrible, the Tasty platform is very slow sometimes.
Chair Powell, Nick Timros from the Wall Street Journal. Roughly 1 year ago, when the 10-year Treasury was flirting with 5% and 30-year mortgage rates were near 8%, you noted how higher borrowing costs, if they were sustained, could weigh on economic activity. Given that you've said you believe policy is restrictive and the Fed is now dialing back that restriction, are the growth risks presented by higher U.S. Treasury yields today any different from those you identified 1 year ago when inflation was still meaningfully above your target?
No.
So I would just say this: we've watched the run up in bond rates, and it's nowhere near where it was, of course, a year ago. I guess the long run rates are well below that level. So we're watching that. Things have been moving around, and we'll see where they settle. I think it's too early to really say where they settle. Ultimately, I'm sure we've all read these decompositions of what, and I certainly have, but it's not really our job to provide our
Bitcoin's
specific
falling
decomposition.
under
I will say,
4-hour
though, that it appears
resistance
that
or back to
the moves
4-hour
are
resistance.
not
This is what you
principally
want to
about
see
higher
if you want
inflation
price to roll
expectations. They're
over.
really about
There's many
a sense
levels
of
where you
more
could potentially find
likelihood
support.
of stronger growth and perhaps less in the way of downside risks. So that's what they're about.
If you're looking for downside, I'd be
we do
looking
take
to
financial
scout.
conditions into account if they're persistent and if they're material. Then we'll certainly take them into account in our policy. But I would say we're not at that stage right now. It's just something that we're watching. And again, these things don't really have mainly to do with Fed policy, but to do with other factors in the economy.
If I could follow up, is the September SEP, are those rate projections still valid? Do they still seem relevant given where we are now?
It's you get halfway through the cycle between the last set and the next set. I wouldn't want to comment one way or the other. Let's talk about the data we've gotten since the last meeting. So, in the main, the economic activity data have been stronger than expected. The NIPA revision was strong.
The reason I would only be looking for scalps is because, Donald Trump isn't actually going to be able to implement any of his policies until next year once he's actually, put into office. As of right now, the Biden administration still has the office, so they can still try to pass laws, especially knowing that they're more than likely going to lose the House and the Senate. So the first time Donald Trump was the president-elect, he did not have the House and Senate. So every time he wanted to pass a bill, he had to fight against the Democrats that ran the House and Senate and some of the majority Republicans because they weren't in line with Donald Trump's policies. But now America has freaking spoken, right? Like I seen the View trying to blame Trump making the election because of white women who are unintelligent. That is the most ridiculous shit I've ever heard in my entire life. Like to blame that on white women. Of course, it was not a white woman that was blaming white women. No, America spoke as a whole. Like the whole country said, not only are we sick of you all telling us what we can and cannot do, we're not only going to not vote for the coup person that you tried to put in front of us, we're also going to smoke all the Dems out of the freaking House and the Senate as well. We're going to not only put Donald Trump in office, we're going to put Donald Trump in office with a full reign to do whatever he wants to do for the next 4 years. So be careful on looking for massive long-term short positions on Bitcoin, because Donald Trump did say that he was going to be looking to put Bitcoin on the U.S. balance sheet. Now, whether he does or not are two different things. I don't believe politicians ever. I don't believe any of them until they actually do it.
Stronger. Certainly the September employment report was stronger. The October report, not stronger.
But Donald
Retail
Trump is
sales
not a
stronger.
politician.
So overall, though, I think you
Not
take
really.
away a sense of some of the downside risks to economic activity having been diminished with the NIPA revisions in particular. And so overall feeling good about economic activity. So I think we would factor that in. At the same time, we got one inflation report, which wasn't
We'll go
terrible,
over
but
some
it was
bullish
a little
and
higher than
bearish
expected.
things
So
when he's done
I think,
talking.
really the question is December, and by December we'll have more data. I guess one more employment report, two more inflation reports, and lots of other data, and we'll make a decision as we get to December.
Gina Smilik from the New York Times. Thanks for taking our questions, Chair Powell. When it comes to December, what will you be looking at specifically as you try to make that decision? And then as of the Fed's economic projections in September, you had written down 4 quarter-point interest rate cuts in 2025. Do you still think that those are likely? Is that sort of the baseline outlook at this point, or has that shifted? And if it shifted
There's
at
a
all, can you give a little
67%
bit
chance
of
that they
detail
will
as to
cut
why?
rates in December.
You know, I can't.
As
we
of
don't
right
fill out
now,
a-
he's
we
not
don't fill
going
out
to
an
say,
SEP,
yeah,
and
we're going to cut
I
in
can't
December.
characterize one that wasn't filled
They've
out today.
never
so I
done
can't
that,
really speak
ever.
for
They're
kind
not
of
going to
exactly
start.
where the committee is. I will just say for December, we're going to be, again, at every meeting, we're going to be looking at the incoming data and how that affects the outlook. As you know, we're in the process of recalibrating from a fairly restrictive level at 5.33%. After today's move, we're down 75 basis points.
Not
And
quite a full
we're asking
point
ourselves,
yet,
is
but
that where we need
almost.
to be? You know that we're trying to steer between the risk of moving too quickly and perhaps undermining our progress on inflation, or moving
percentage
too
point,
slowly and allowing the labor market to weaken too much. We're trying to be on a middle path where we can maintain the strength in the labor market while also enabling further progress on inflation. We think that's where we are, but that's the question we're going to be asking in September and in other meetings. And again, I can't really update you on the committee's thinking because we don't fill out an SEP at this meeting.
Yeah, totally appreciate that. I
Right.
guess when it comes to your own thinking,
there
do you
wasn't
think
a dot
that
plot
a
this
full
time.
percentage point of rate cuts in 2025 is a reasonable outlook?
Again, I'm going to wait. We're going to wait and see how things
Look in
come in
December.
December. I mean, it's just. I would put it this way: we're
Everything
on a
looks
path to
good.
a more neutral stance, and that's very much what we're on. That has not changed at all since September, you know, we're just going to have to see where the data lead us. We have, you know, a whole 6 weeks of data to look at to make that decision in December. Obviously, I'm not ruling it out or in, but you know, I would say, you know, I would say that. You know, again, we didn't update the SEP, so I'm not going to characterize, you know, where the committee would be.
Howard.
Thanks, Howard Schneider with Reuters. I wondered if you could please elaborate and explain a little bit the 2 changes in the language of the statement here. In the first paragraph, when you say inflation has made progress, dropping the word further progress. And in the second paragraph, dropping the sentence that the committee had gained greater confidence that inflation was progressing towards its 2% goal. Is there any policy substance behind either of those changes in language? Is it meant to open the door to a December pause? Is it meant to communicate anything about the stickiness of core?
I love these reporters. They absolutely know that he is not going to comment on what they are going to do next in December. That's not what he will never do that, and they know that. But they just keep trying to reword the same sentence over and over and over again. We looked at the inflation rate just a little bit ago. It is currently trending down towards the 2% target. As long as it continues to do that, they will continue to cut interest rates, barring no massive, you know, bank explosions or anything like that. Now, obviously, with the 10-year yield going up, that does pose a little bit of a threat to some banks, but we know that the Fed is really good at giving them money. Will they bail you out if you blow up your bank account? No. But will they bail them out? Of course.
Inflation the last 3 months.
Not really, no. So let me tell you what we were thinking. So the test of gaining further confidence was our test for the first rate cut, right? And so we met that test in September. And therefore, we take that test out. If you leave it in,
S&P's right back at
then
highs on the
it's
day.
new forward guidance. It's brand new forward guidance. What do you mean by it? Are you
We're at
making? Are you requiring yet further? We have to say yes or no at every meeting whether we've made further progress. The point is, we have gained confidence that we're on a sustainable path down to 2%. So that I would tell you is
Bitcoin
what that's really
back to
all
moving
about.
right back
it's
up
not meant
again.
to send a signal. Neither of those is meant to send a further signal. And you know, saying further progress, it becomes a test. We don't want to be. We don't think it's a good time to be doing a lot of.
There we go.
Forward guidance. You know, there's a fair amount of uncertainty in what I've said. The path that we're on, we do know where the destination is, but we don't know the right pace, and we don't know exactly where the destination is. So the the point is to find the right pace and the right
S&P's
destination
fresh all-time
as
high.
we go. And I think there's a fair amount of uncertainty about that, and you don't want to tie yourself up with guidance. You want to be able
NASDAQ,
to
fresh
make
all-time
sensible
highs.
decisions as you
S&P
go.
here, ES futures, NASDAQ here. Both of them.
Steve Leisman,
These are
CNBC.
both
Mr. Chairman, you talked
intraday
about,
charts.
Higher rates, perhaps from an expectation of higher
Intraday
growth. You didn't
charts.
talk about it in terms of
Fresh all-time
expectations
high.
of higher
Fresh all-time
deficits.
high.
Is that something you think might be behind the recent rise in interest rates, and are rising deficits a concern to you?
So we don't comment on fiscal policy, and again, I don't have a lot more to say on what's driving bond yields. In terms of
Let's see if it rolls over now, but
of policy changes,
not really
though,
looking for that. to happen.
let me give you a sense of how this
But
this
it
works
could.
in
It
the
is
ordinary
very
case.
far. Like
Let's
you're
say
almost
Congress
two standard
is,
deviation
considering
move away
a
from where
rewrite
you
of the
should
tax
be.
laws. Doesn't matter what's in the content. So we would follow that. At a certain point, we'd think we see the outline, so we'd start to model it, and then we'd wait, and at a certain point, the staff would brief the FOMC and say, these are the likely effects. There's lots and lots of literature on the effects of tax policy changes on various parts of the economy. So we'd try to get smart on that, and then the law actually passes. And you'd start to put it. You'd probably run an alternative simulation before that happens, just to keep people trying to understand it. Then when it actually passes, it goes into the model, along with a million other things. So, we have a very large economy. Many things are affecting it at any given time. And, a law change of some kind would go in there, but it would, it's a process that takes some time. Clearly, the legislative process takes a lot of time. And of course, the real question is not the effect of that law. It's all of the policy changes that are happening. What's the net effect? And, the overall effect on the economy at any given time. So I think that's a process that takes a lot of time and that we go through all the time with every administration, constantly, and this will be no different.
If you're new to the
right
channel,
now,
welcome.
There's nothing.
If you're not,
there's nothing
welcome
to
back.
model
If you
right
want
now.
to,
It's such an
chat, you
early
can
stage.
subscribe
we
and
don't know what
chat.
the policies are.
I have
And
the
once we
chat
know
turned
what
on
they
to
are, we
subscriber
won't have
only
a
to keep the
sense of,
bots out of the
when they'll
chat.
be implemented or all those sorts of things. So I think I would just say we're not doing that now, and all that will take time. And it will be very much
price
regular
prediction
order
by end of year. I don't really have one. I mean, technically, we've broken out of a consolidation formation, a Wyckoff accumulation. There's various names for the formation and the pattern or the price chart formation. The measured move. All right, let's look at it real quick. As I've done this before, I don't know if I've done it on a live stream or on a Saturday upload or not, but the measured move would literally put you up around $90,000. All right, so here would be your all-time high, and you would just like basically move that up. You know what I mean? Like a measured move from a breakout and bullish continuation from this would definitely put you at about $92,000. That's a measured move. Now, will it hit a measured move, and can it exceed a measured move? Both of those answers are yes. You know what I mean? I can't see into the future, but as of right now, as long as we continue to make fresh daily highs and continue to move higher, continue to build in higher lows with those support pullbacks, I have no reason why by the end of the year we couldn't be there. I mean, if you just get 3 or 4 more days like this, you're going to be there. You know what I mean? Price projections are one thing that I usually do not tackle. Basically what I mainly tackle on this channel is I show you areas where I am taking positions. I don't know if you were following me last year when we shorted Bitcoin when nobody else was shorting Bitcoin, but we shorted Bitcoin right here. We shorted it up here, then we shorted it again down here. While everybody was calling this an accumulation formation, we saw for what it really was, and what it really was a pullback into the yearly opening range and a rejection from there. As you could see, you could not get any bullish momentum above the 2022 yearly high. And basically at January, on Jan 1, 2023, I've been bullish on Bitcoin and risk markets, and that has not changed. Last week's video, I said if Bitcoin doesn't get back above the 60 on the RSI, I would start looking for shorts. Bitcoin broke out 2 days later after I posted that. 2 days later, I said if it does not break out this week, I am going to be looking for shorts. It broke out that week. So, I mean, we do a pretty good job of nailing the basic standard direction because we don't try to fight the overall trend. But as far as price predictions, the only thing I could give you would be a measured move. So $90,000. And that there's no guarantee it'll be there by the year end. If the U.S. does start investing in Bitcoin, like Donald Trump says, like Q1 next year, maybe even Q2, you could get up there or even exceed that price.
We do that.
If I could just follow up on Nick's question, are the current rates something you feel like you need to lean against in that they go against the direction of policy by adding restrictions to the economy, or do you just take them as a given and perhaps a signal that you should do less?
I just think the first question is
trying to
how
quit
long will they be
smoking
sustained?
some
If you
and
remember
chewing
the
these
5%
nicotine
10-year,
patches, or not
people were
nicotine
drawing
patch, but
massively important
these
conclusions
thin
only to
things.
find, 3 weeks later
Nicotine
the
pouch.
10-year was 50 basis points lower. So,
chewing on a 9
it's
milligram.
material changes in financial conditions that last, that are persistent, that really matter. And we don't know that about these. What we've seen so far, we're watching it, we're reading, we're doing the decompositions and reading others, but right now it's not a major factor in how we're thinking about things.
Chris.
All right. I really don't have time for these questions. These questions are absolutely stupid. They're just dumb. I wish they would ask good questions. I will read the whole entire FOMC statement later once it's put out on the website, but we don't really need that. Let's go in here and look at some technical things. The important thing to take away from Bitcoin right now is you're bullish. Obviously, on the daily chart, you have broken out, you have made fresh all-time highs. You are seeing bullish daily continuation today. It is struggling a little bit, but I mean, the Fed just came out, and this could end up being a sell the news, simply because this move was so big based on the election. But if we go back, let me pull up a picture that I posted in the Discord a few days ago. The market was actually doing a really good job right here. The market was actually doing a really good job on so my internet was doing really, really good when I started to stream. Now it's like, well, here I just pulled the Discord down. So right here, it's like it was doing a really good job pricing in what it thought was going to happen. And I can basically outline this for you real quick. This is obviously Harris, and then the orange line down here was Trump. The red line here is price from Bitcoin. So if you look at, you can see Harris had the lead, when they first announced it, and then Trump was shot. I mean, Trump was shot way back in here, but you can see where Trump started to take over the lead right in here. And then you can see the red line is literally Bitcoin's price, right? So as Trump starts to win or starts to take the lead away from Harris, and this was done via betting mechanisms and stuff, not just on polling, because the night before the election, or that day actually, me and my girlfriend watched Wheel of Fortune, and right before Wheel of Fortune came on, the news desk guy of America literally came on and said that Harris was winning by a big amount in the polls. And this was while voting was currently going on. Literally lying. The reason they say that stuff is simple. If the Republicans sitting at home are thinking she's winning and there's no chance for Trump to win, they won't go vote. That's the reason for doing that. Literally is the only reason for doing that. But Bitcoin's price followed as this started to break out here. Look at what the price did. Price literally broke out. You know what I mean? So the market was pricing in a Trump win. Literally. And the market is a forward-looking mechanism, so it does a really good job on pricing in forward risk. Really good job. What happened? All right, so you just got a higher 4-hour close on Bitcoin. Let's go look at it. So brand new, fresh 4-hour higher close. So this is today's range, guys. This is where it broke out today. Your daily range is basically, this is your daily low right here. This red candle, it's your daily low. There's your daily range expansion to the upside. You just closed a 4-hour candle to the upside. Now, we did come back and we did retest 4-hour resistance, and I did bring that up to you when it was happening. We go down into the intraday chart. You can see right here is where we were retesting that 4-hour resistance. So this is the kind of stuff right here that indicates a lot of bullish pressure. When you can't even really get any kind of bearish momentum under and start closing these 5-minute candles under a key level like that, it's pretty indicative of what price is looking or to try to do, right? So this is why I said you got to really be careful about taking short. Sorry guys, I have positions that are filling and whatnot. But never mind that. Those are just it's nothing that I'm doing right now. But anyways, where was I at? Oh yeah, it's very indicative of what price is looking to do. Now, with that being said, it is extremely, it is extremely high. So a pullback could be relevant here, but we got a nice little pullback even after the breakout right in here. This was a nice, standard, slow, very orderly pullback. We pulled back to the weekly open, literally made a fresh weekly low during the members only live stream. And then I got long, but I got stopped out. I got long when we made that fresh weekly low. It was right here. So this is when we dropped down. We made a fresh weekly low, and I got long right in that area. No, sorry, it was here that I got long because I waited for the retest, or essentially I waited for this thing to break down again, and I got long on the second shot, and then it still went down on a third dig. So 1, 2, 3 lower digs here. So I almost knew that this thing was going to go higher, and I still didn't take a fresh long. So then I took a fresh long here on the next day, right here. After we got this breakout, I had already gotten stopped out of this long as this thing dug down for that third push. I knew it was just basically a stop run. So I was like, all right, fine. I'll just wait for it to expand a little bit, and I'll look to buy on a pullback. On this hourly pullback right here, this happened at 10 o'clock a.m. Eastern Standard Time, 30 minutes after the New York session started. I got long literally at the low of that candle. And then 4 hours later, I was stopped out again and to boom, that. So yeah, I missed the whole election move, even though I tried to catch it twice. So, and that's what I was talking about on the weekly upload last Sunday. It's going to be difficult to position to catch anything because you're going to get these multiple stop runs, and it don't matter if you're long or short. Even if you were trying to catch this short right here, coming into Q3 2024's high, you caught the wick high, you got stopped out 2 hours later. That's just what it does. And you get these massive momentous moves back to the downside to literally stop out anybody that got long early morning in the early daily range, like London session stuff, right? Because how many people are going to watch a momentous candle like that go from the New York session highs all the way back down to the London session open? Are you going to sit in that position, or are you going to bail? 90% of retail is going to bail, right? They're going to be like, well, I don't want to take a loss again, because how many times have they already taken losses? That's just the way it works. And we knew it was going to be volatile this week. We just knew it. I mean, the VIX was up at 21. It closed above 21. Had a 151 point expected move. I mean, we just knew it was going to be volatile, both to the upside and to the downside. And it was pretty difficult. So literally, I've just been kind of scalping these moves higher. As it goes higher, I scalp it and I get I get up a few percent and I bail. Then I wait for another pullback and then I look for an area to scalp again, but I'm only targeting long trades. I'm not looking to target short trades right now because even though it's extended and it needs to pull back a little bit, this thing can continue to go. We go over here to the weekly time frame. So many YouTubers were calling this an island top reversal or a double top last week. I even did it, but I only did it for clickbait. If you watched my video, I specifically told you that I was only looking for bullish entries, not bearish. My rules do not permit me to look for bearish entries as long as we're closing weeklies above the 21 exponential moving average. And here is the weekly exponential moving average all the way down here. So this island top reversal was literally just to smoke all those shorts. You can see how you made a fresh weekly low right there. Took out the previous week's low. And up it went. Up it went. I even got stopped out of my USD CAD short. I honestly thought that was going to be a good trade, and it ended up getting stopped out. But we're going to pull up. I'm still in the Euro short. So I got this short Euro up here. I'm still in that. I've already taken profits on this trade, multiple times. USD JPY got a nice move back to the upside, stopping out anybody that tried to get short early. And then the USD CAD short, which is working out now, it did come back and stop me out. So I was ended up in here, and I was liking it, but I didn't move it. I didn't take any profits on it. I was looking for an extended move down on the US dollar going into the end of the year. And I'm still kind of looking for that. We go look at the dollar. We look at the quarterly. This was the whole reason why we even looked for dollar long positions, i.e. the short on Euro USD, was because we were looking for the USD to find a low early on in this quarter. And it did. And it ran almost all the way back up for a retest of last quarter. That would have been an area to take profits. You can see it didn't quite make it up there, whereas on the Euro, it did. You did make a fresh quarterly low on the Euro. See it there? That wick is definitely lower. So we essentially completely retraced all of last quarter's range. So I was looking to capitalize on that move, right? And we did. So we pretty much nailed the entire quarter move. So I was looking for that to happen maybe again on this, roll over and come down and test quarterly support. Because I'm a candlestick analyst. I look to trade these ranges. I know how price works. I know this looks more bullish than bearish, obviously, but it was just a play on the dollar. I already made enough money on the Euro to where I could take a few chances at looking for dollar shorts. The dollar is just really, really bullish right now because of the 10-year yield, in my opinion. Because if you look at the 10-year yield, how it's moved with the dollar, I mean, they look almost identical. It's been a pretty vicious move to the upside. So that would be, my only concern right now in the markets is that dollar strength and the 10-year yields. And the only reason I'm concerned is because it could cause pressure on the banks. Although if you go look at the banking sector, you're going to see that this thing does not look bearish at all. I mean, booyah, right? That is a massive breakout to the upside. A lot of people are going to try to short this for a gap fill. I think you're too early. But I don't know. You know what I mean? That is a pretty big move. You're very much extended here on the daily, but it's the weekly which you need to really pay attention to. So, or as far as RSI, if we go back to Bitcoin, You can see that you just got that nice breakout move above. Here on the weekly RSI above the 60, we're bullish as long as we're above and closing weeklies above the 50. That's when we're bullish. But we want to see Bitcoin break out above this 60 here to initially confirm bullish momentum. And we've gotten that. We've gotten that. Now we need to close on the highs or close to the highs of this week in order to keep this looking like this. All right. A full retracement of this week's range, you're going to be right back under that 60. And it would not look good. So as long as we can stay above the 60 on a weekly closing basis, I think Bitcoin's going to continue to move higher, guys. This is showing you that the momentum is not on the bears' side. They're just wrong. They're just wrong. And we can go look at a couple of the things that we looked at last week. I need the other. So we can look at XLK, XLE, for instance. Does this look like they're positioning themselves for any kind of inflationary environment or even a recessionary environment? The answer is no. This is what it looks like when there's inflation fears, right? Big moves lower. Like this is a daily chart. You got 3 massive drops there on the daily. You're actually, I mean, some would call this a bearish pattern, but if you break out to the upside, it won't be. This doesn't look bearish at all. And then if you look at the SPY versus the XLP is going to be your safe play, right? When people run to safety because they're not looking for any more upside on the market, you would want to see something like this. And we did get that move back when the yen carry trade unwind happened. So we were looking pretty bad there, but we're not anymore, are we? So literally there's nothing in the markets right now that's even suggesting a top. And that's what you need to be prepared for. When this starts to change the way it looks and it starts obviously making fresh lows and lower highs, and then lower lows, then you can start to potentially look to position yourself bearish. But until that happens, I think you're on the wrong side of the market. As far as oil is concerned, I have no idea what's going on with this. I honestly assumed a Trump victory would be bearish for oil because drill, baby, drill. You know what I'm saying? Trump will drill for oil. And some people tell me that doesn't necessarily mean that oil prices will go lower. The way I look at it is there's going to be more supply on the market. If there's more supply on the market, prices generally go lower, not higher. But we'll see. I mean, oil did have a nice move to the downside. It did reject 2024's yearly opening range here, but it's right back up again. So if it starts to close dailies above the yearly opening range, which is 2024, it's going to be 71.43. The more daily closes you have above this level, the more bullish it's going to start to look. Because as of right now, on the yearly time frame, you are bullish. You're not bearish, you're bullish. You're up on the year. That's bullish, that's not bearish. All right? Down on the year, that's bearish. But you're not down on the year as of right this second. And then finally, Tesla, I missed it. I was looking for it to get back above 2024's yearly opening range. 250.08 was the exact price I said to watch for bullish trades right here. Right here on Tuesday, you had 2 opportunities to get long on Tesla. Via calls, via call spread, via shares, via put sells. However you want to get long. You could have got long Tesla. I wouldn't have, and I didn't because the election was on this day. or at night, and I didn't want to wake up to a massive move to the downside, because there's just no way to predict that. It's just an all-out bet. It's no different than an earnings play, right? It's just a gamble. But had you done it, I mean, you're looking pretty damn good today, because Tesla is doing good. Doing good. Here's that yellow line. I mean, that's back at 250.08. You're almost at $300. That's a $50 move. That's like a home run trade. Home run. S&P 500 is continuing to make fresh intraday highs. Oh, eventually, I figure we'll probably get a pullback, like maybe tomorrow or the next day. But today, it does not appear to want to do so. Here's your intraday chart. This would have been the opportunity to lose it, and you just couldn't. You just could not lose it. This is never bearish, guys. If you just look at price and draw in your ranges that you can clearly see here, you can see what's transpiring. Don't worry about the wicks, all right? We don't care about the wicks. We care about closes. Here's an obvious range. What appears to be happening down here at the bottom edge of the range versus at the top edge of the range? You know what I'm saying? So like if you're shorting here, using this as your stop, after sitting in this for an hour, you know you're pretty much on the wrong side. It's easy to look back in hindsight. I understand that, but we can do that intraday on just about any chart. So for instance, S-Box. This is one that I was looking to be bullish. Ultimately, it did hit my bullish target. My bullish target was Q3 2024's high. We did hit that. We have pulled back here, but we're still closing dailies above the yearly opening range. And this range on the daily time frame is getting tighter. But you did ultimately have that expansion from your Bollinger Bands, which is like a squeeze trade. And it did go to the upside. It just didn't get that bullish continuation. Could it possibly hold the yearly opening range? Absolutely. You've wicked down into it twice now, and you haven't been able to close under it. But as far as intraday trades, if I was going to be trading this intraday, right here, right now, this is the current range that I'd be keeping my eye on. Right? Would I take a break down? No. But you could get short 96.10, throw your stop up here or up here, and hope for the best. But as of right now, it looks like this was your move lower. This was the move to break down under the range that was set. That's your highest close. That's your lowest close. And then 2 5-minute periods, you're right back up on the highs. So you just need to watch the range. Let the range play out. This range looks like it's trying to break back up. So generally when you see that, you can pretty much say there's passive buying taking place. Like right in that range. Until you break down under it. So watch your ranges if you're going to make those intraday scalps on stocks. This is an inside day. An inside day, you're trading inside yesterday's range, so it's going to be choppy and difficult to trade. Those are generally the ones, those aren't the trades we want to take. We generally look for trades that are offering up expansions to the upside or to the downside. Good afternoon, Mr. O'Donnell. At what circumstances will you try to short Bitcoin? I won't. Best case scenario on Bitcoin is I would look to take profits around 90K on my HODL bags, right? Because even though I'm not a Bitcoin maxi, Bitcoin is a fantastic thing to set in over time as it generally does trend higher. I mean, Yeah, you get your bearish cycles and your bullish cycles, but you get that in every market, right? Every market has boom bust cycles. So I mean, the best way to do it is to take your when you're massively overbought on the RSI on the weekly time frame, maybe go ahead and take some profits off the market, put it in cash, wait for Bitcoin to pull back to oversold on the weekly, and look to get long again. Right? I mean, that's just the easiest application for a strategy that I could give you on Bitcoin. If you just simply wait for Bitcoin to get oversold on the weekly RSI and be a buyer, generally you're going to do pretty damn good. I mean, right? So, yeah. If you take profits when you're massively oversold or overbought, you're going to do pretty good. Now, are you going to nail the absolute top or the absolute bottom doing that? No, you will not. But will you be positioned for the longer term cycle? Yes, you will. Of course you will. Of course. If you just look at this chart and this RSI, being a buyer down there has been the place to be a buyer. And I've been saying that since the day my channel opened. If you just buy it when it's oversold, you're going to buy in good spots. Now, did you catch the low at 19,000? No, you did not. But would you have rather been a buyer at 19,000 or would you rather be a buyer at 76,000? Obviously, you'd rather be a buyer at 19,000 and then just sit in it for 3 to 4 years and then look to take profits once you get massively overbought again. Because Bitcoin, as long as nobody hacks it or nothing fundamental happens to the code, there's no reason why it's not going to continue to go higher over time. So if you are a top buyer, if you have been investing at the highs and you've been getting killed in the bear markets, maybe change that around in the next cycle. You will get an opportunity to buy an overbought RSI. Bitcoin is not going to remain overbought for the rest of its life and the rest of yours. I know it's fun to assume that's going to happen, but that is not going to happen. It just isn't. These markets have significant pullbacks. And they do it often. You look at the S&Ps. Now, the S&Ps hasn't hit overbought since the bear market ended in 2022. But still, would you rather be a buyer at the all-time highs, or would you rather be a buyer when you're in the overbought region, or oversold, sorry? You don't want to short oversold, overbought, and you don't want to short oversold either. But you can absolutely take profits. Now, if you want to be a shorter, if you do want to try to make money with leveraged positions, then it's going to be a little bit more difficult, and you're going to need to get a little bit better at market timing. My suggestion would be to wait until December before you look for shorts, because Bitcoin has generally made its tops in December or November after it's had a fanatical, huge bull market. I mean, Bitcoin's almost one of the easiest trades in the world, if you ask me. And it has been for a long time, which is so crazy, right? You got your maxis, your perma bulls, and you got your perma bears. Bitcoin's going to effing zero. Those guys are stupid. Michael Saylor is not dumb. He's not going to put $8 billion into an asset class that he can't make money on. He is not dumb. All right? The man has done his research. So, yeah, and obviously he's got his risk hedged out. You can do that as well. It is simple to hedge long positions. by just simply taking a short position. You can hedge out a long position on futures or buy options. There's so many ways to trade the market. There's so many strategies. But, short answer, if you're not in this cycle, don't even worry about it. I mean, because if you try to buy these highs thinking, oh, it's going to go up another 20 grand because Trade Talk said so, you're not doing it right, because I don't know what it's going to do. I can't see into the future. A measured move suggests that it's going to go higher, but you could have 2 weeks up here and then a big fat dump. Nobody knows what's going to happen. I don't think that's going to happen, obviously. But we're getting pretty close to running this cycle out. You know what I mean? And you're at the highs, man. I mean, you're making fresh all-time highs. So, yeah, I would just wait for Bitcoin to get oversold again, and then start to build in your position for a longer term 4 to 5 year hold. Have I looked into Starlink? Yeah, I bought the Starlink. I had the Starlink for a couple weeks. I tried to get it to work. It never worked. Not once. I moved it different places, and back when I bought it, they didn't have good customer service either. You just had to email them, and you would get an email back from them like 10 days later if you were lucky. And I ended up paying over, like, all said and done, I was in it for over $800, and I wanted my money back, but they gave me back 200 of it. So I was like, all right, well, I'm not going to do that. Not at least until they have a better customer service model. I might be moving. I don't know yet. If I do, then obviously I'll be able to go live on a more frequent basis, get back to doing live streams every morning or whatever, because, I sit in front of the monitor mostly every day anyway. But I don't know yet. I'm not 100% certain on what I'm going to do. But yeah, it does look like there's a higher probability that in the next year, maybe year and a half, I'll be moving into a bigger place, and I will have better internet there inherently, because it's just my location is my internet problem, really. I mean, I have neighbors that live not even a quarter mile away that have high-speed internet. I have high-speed internet, but it operates off of a cell tower, and at any second they can throttle it. You know what I mean? My internet, it was doing good before I started. I was up in the 50s, like 50 megabytes per second before I started the internet. Like it was over here. And this is the download speed. For live streams, the upload speed is what you got to really have strong. So it's just like this internet tries to screw me every time I go live. But that's going to stop, because I'm going to get a wired connection. This wireless stuff, I'm just done with it. I'm done with cell towers throttling me or moving me off this tower and putting me on a further away tower and all that garbage. I'm done with it. I just want a line running into my house that I can plug into my PC and have good, consistent, fast internet. All right. But yeah, that's where we're currently setting on Bitcoin and the rest of the risk markets. The VIX got killed. It's back down to 15. That's good. That's what we want to see. Beautiful, beautiful, beautiful. But right now, I will tell you another, other than that 10-year yield being very big, still, another thing that I'm currently worried about is we're still trading like 1.1 million contracts on the VIX, and it's just 3:30. You got another hour to go before the market closes. That's a lot of trading volume on the VIX. Now, here's what you need to do, because the VIX is a risk pricing mechanism. It looks out 30 days. All right? It looks out 30 days. We go in here. This is 12 days out to expiration, 2 weeks. Look at the open interest on the call side. Look at the open interest on the put side. You're in the 100,000 contracts, 100,000, 100,000, 100,000, 300,000, 200, 3,000, 100,000. Same over here. 500,000 put contracts. 104,000. Okay, you get the point, right? Lots of option contracts being traded 12 days out. Let's go look out 33 days. Look at your open interest. Put side, call side. That's concerning. Look at your volume. That's concerning. Nobody is looking out further than 2 weeks. Nobody's taking trades on VIX options further than 2 weeks out. If you just go into 19 days, look at the significant drop-off in contract size on your open interest. Whereas on the 2-week open interest, you're looking at hundreds of thousands of contracts. On the 19 days open interest, you're looking at 400. Huge difference. Huge difference. So it's going to make it very difficult to price forward risk out more than 30 days based on how people are positioning themselves right now. Now, could this simply be so many people are just literally trading 0-date expiration options? Yep, it could be that. And that is worrisome because we've seen what happened right here. Whenever the VIX is above 30, the sky is falling, right? The sky is essentially falling. When you're at 60 on the VIX, the world is over. I mean, there's only been a few times in history that you've seen levels on the VIX that far, right? And they've all been massive, massive. This is 08. 08. This is your pandemic. This is your yen under carry trade unwind. So huge. And that's also probably because of 0-date expiration option activity. When volatility is high, though, it's very difficult to trade 0-date expiry options. But if the market's in an uptrend, it's easy because you sell puts. Because the puts are what's expensive when the VIX is up. When people are buying more and more puts, they're hedging off their long portfolios, the VIX goes higher. So the price of puts gets more and more expensive. Therefore, if you're selling puts, you're going to be on the right side of the market. Just make sure you're still in a bull market. Please do not try that strategy when the bull market is over, because you will get wrecked. Wrecked. But once the VIX gets back down, or if the VIX gets back down to around the $12 area, I will start buying way out of the money puts again, because those way out of the money puts can literally hook you up. You know what I mean? It would be very easy to go out there and buy when you're up in the 5,600 area on the S&Ps. Go out and buy a strike ahead of this low, the 5,200. You're going to be able to get that strike for cheap. Just make sure you buy it at least 100 days out, 150 days out, right? Because you can't see into the future. So essentially that low would be here now or here. And if you want to go crazy, you know what I mean? You could buy the strike at 53.80, the put strike. But you got to wait for the VIX to get down under 12 to make it cheap, to make it worth its while. When you're buying puts, when the VIX is high, you're not going to make money generally because you're already paying an exorbitant amount of fees on the premium based on the VIX implied volatility. How do you join your Discord group? I got a link in my description on any of my YouTube videos to Patreon. It isn't free. I've never had a free group. It is a premium group, but I don't shill it unless someone asks about it. You know what I mean? And the only reason I do that is because at the beginning it was busy. It's not so busy anymore. So I don't know if I'm even going to continue to do it in the future. It's just, it's something that I'm thinking about. I mean, the members that I have now, obviously I'm not going to close it down because I do have paying members, but it is a little bit expensive. But the value that you can learn, I mean, you can literally DM me 7 days a week, 24 hours a day. And if you DM me and you question me, I will help you or try to help you become profitable. I cannot make you profitable. Nobody can make you profitable but you. This whole you need to buy courses stuff to make it in the markets is stupid. It's not true. All you need to do is know the basics and know how to manage risk. If you can do that, you will be able to make it. If you're looking for YOLO trades constantly, you are going to go broke. But there is a link in my description. You want to look for the $25 a month level. And then I'll see that you've done it, and then I'll send you the link. I missed the whole Puma on Bitcoin miners. Could you see a bit F? Thanks. Yeah, we can look at the miners. What was it? Bit F? Well, I mean, this is a very cheap one. I think you're better off probably like trading Mara or Riot. Now, hear me out when I say this. I think you should go do the same approach on those miners as you would on Bitcoin. You know what I mean? Like if you're in a bull market, wait for pullbacks. My main concern that I have with Bitcoin miners is earnings, right? I think you would probably achieve just as much value if you would just like maybe buy a Bitcoin ETF or buy just Bitcoin and hold your cold storage wallet. It just depends on what your outlook is on Bitcoin. If you want to hold Bitcoin because you think that, someday it's going to be the world currency, then you need cold storage. Buying an ETF isn't the right strategy in that circumstance. If you're only looking to trade Bitcoin or to hold Bitcoin 4 to 5 years at a time to make alpha when Bitcoin has these massive up moves, like it seems to do every 4 to 5 years, then and you're just wanting to transfer that Bitcoin into US dollar or your currency wherever you live, then just buy the ETFs. There's no point in even doing cold storage and all that. But if you want to own Bitcoin on cold storage, you're better off using, a crypto exchange. Just don't keep your coins on exchange. When you buy them, you instantly take them off exchange. Put them on cold storage. 98% of my Bitcoin is on cold storage. I have a little bit of Bitcoin on Coinbase. I have a little bit of Bitcoin on Weeks. I haven't transferred my Bitcoin off Weeks yet. As far as I know, I don't think Weeks is going to bring back the inverse ET or the inverse swap contracts. So if they're not going to bring back the Bitcoin ET or inverse swap, perpetual swap contracts, there's no point in holding Bitcoin on the exchange. But if they are going to bring it back, then there is. But as of right now, I'm just using Tether. So in a sense, I'm just trading Bitcoin to transfer it back to USD. I already own a significant amount of my net worth is in Bitcoin, and I don't want to make it much higher. You know what I mean? Because it's already at the point where every time Bitcoin fluctuates $1,000 to the downside, it hurts. I love seeing it fluctuate up 1,000, but I hate to watch it fluctuate down 1,000. Then it's like, ugh, You know what I mean? So yeah, if Bitcoin hits $90,000, I will probably take 5% of that off and just put it into US dollar and transfer it into a trading account, Forex or something, and trade the dollars to grow them. And my opinion, your channel is much better than, okay, well, me and Jordan have buried the hatchet, all right? When my girlfriend got sick, I lost my brother, my mother, and my stepfather all within 2 months this year. I lost my brother on July the 24th. I lost my stepfather on August the 16th, and then my mother on August the 19th. So I've had a very bad year, very bad summer. And then my girl got sick really bad to where we didn't know she was going to make it. So I buried the hatchet with Jordan. I begged him for prayers. I didn't know what else to do. I think Jordan's trading style is different than mine, no doubt about it. But I'm not going to speak ill on Jordan or his community ever again, because life is too short. It's just too short to have silly infightings about in this stupid trading internet place. You know what I mean? Everybody's just trying to do the same thing. Everybody's trying to get into markets and try to figure out a way to flip it and earn a few bucks. You know what I'm saying? I'm not gonna hate on anybody's courses or anything like that no more. Life is just too short. Yeah, I don't need to have a community of my own. I did it because a lot of people asked me to do it. And those people have stayed with me there's people that's been there from day one. You know what I mean? And to those people, I can't thank them enough. Obviously, it does help. And I am very grateful. So I don't mind to help. You know what I'm saying? I don't mind to give free expertise out. I'm not the best analyst out there, but I can keep you on the right side of the market. Generally speaking, as far as longer term market swings, we've nailed every single one of them. There's not one since I've been in public, not one massive market swing that we have not nailed. Not one. We have nailed the top and the bottom every single time there was a major trend about to break. We have caught them. I've caught it every single time. Now, have my members caught it? No. Some of them get left behind because that's just life. You know what I mean? Maybe they take the same trade I do. They get stopped out. I don't. Because maybe my risk was bigger than theirs or whatever, right? There's reasons why it's difficult to bring everybody with you. But I can teach you fundamental principles that if you practice them wholeheartedly, you will do better. 100%. We don't try to sell tops and buy bottoms all the time. We try to stick with the direction of the trend. I trade options on stocks. I trade Forex. I trade Bitcoin. I don't trade a whole lot of other cryptos, but if there's one up 25% in a day, then obviously if I can trade it, I'll trade it. But generally we're trying to, just jump in, jump out, grab a few points, grab a few percentage points on the account, bail. But as far as Bitcoin, I am a long-term holder. I have a lot of Bitcoin. I have a lot more Bitcoin than I do gold or silver or anything like that. So I do believe in it, but I will be the first one to sell it if I hear some really bad stuff, you know what I mean? Or if I see something I don't like, I will absolutely get out of it. I have no problem converting my Bitcoin to US dollars. I'm not a Bitcoin maximalist. I don't believe in holding only Bitcoins because the USD is drying up. I understand all currency is inflated away, all of it. But until you can buy goods like milk and bread and pay for your insurance on your house and your rent and all that stuff with Bitcoin, Bitcoin is useless to me except for to grow my dollars. I know that's going to turn a lot of people off because they want a Bitcoin maxi, but I'm not a Bitcoin maxi. I'm not. I'm a trader. I will leave Bitcoin and go right back to Forex, or I never left Forex. I'll just no longer trade it if I have to. I'm not really worried about it. But I'll tell you one thing, Bitcoin is very good for making large returns over time, for sure. I mean, there's not many asset classes that you can say are trading at $75,000 right now. So, yeah. But I appreciate you, Daily Life with Kelly. I am glad that you find value here. I appreciate you. Yeah, I miss doing the live streams, man. I still try to do them every Sunday for the community, but sometimes they fail. It's just the way it is. Thank you so much for the super chat, Mr. Singh. It's been a while. Yeah, for sure. He said, I wish more influencers emphasize self-custody rather than shilling these brokers like BlockFi, FTX. Yeah, no, I will shill FTX. Make no mistake about it. You know what I mean? Because I trade on their platform. I'm in America, and I know Americans have a hard time finding platforms to trade on. So I let everybody know where I'm trading. And if they use my link in the description, it'll save you 25% on fees. Do I make money off of it? A little tiny bit. I get paid a little bit on volumes. That's it. Do I make enough money to even worry about it? Nope. Nope. Now, if I had 1 million people using it every single day with big volumes, yeah, I'd probably make pretty good money. But my community is very small. So there's no point. And I would definitely let you know when I get bad news. You know what I mean? I let my community know as soon as they told me they were no longer going to be doing the inverse swap contract, because that was my favorite way to accumulate Bitcoin, to be able to just get long or short Bitcoin, and it's settled in Bitcoin. It's one less step you have to take to put that into self-custody cold storage, because the trade is settled in Bitcoin, but they no longer do it. So it is what it is. I'm hoping for a good, clean 4 years of Bitcoin trading and crypto trading with the new administration next year, right? I'm hoping Trump sticks to his word and makes it a more friendly atmosphere than it's been for the last 4 years. But yeah, Weeks is the platform I'm using right now to trade Tether. And I haven't opened any new platform because, like I said, I will be taking profits if it gets up in the $95,000 area for sure. I already have enough Bitcoin on cold storage. I really don't want much more, because the more you own, the more worrisome it is. It's so hard to set in a long position on Bitcoin when you're losing 15% on a daily basis. It really hurts once the amount that you own is a lot. I would much rather have that in a more stable, smaller moving asset. But as long as it's moving higher, I love it. The whole not being able to trade on futures thing actually happened over in this area too. So it's not like this is new. This is a new thing that they just started doing. They were trying to direct everybody over to their Futures Pro side of the platform. So they just essentially took out, in my opinion, the best feature they had. Right now we got a high on the S&P at 6,013 on the futures, on the ES futures. And we got an all-time high of 21,253 on the futures on the NASDAQ. And we got, about another 10 minutes for the normal market place, and then you're going to be post-market. But Bitcoin's looking good. It's really looking good. Thanks for putting being human in trading. That's 100%. I mean, you have to, right? This chart is so dirty, I can't even hardly look at it. Let's go over here and look at something a lot easier. Oh, this one's ugly too. You have to, because the whole trading, everything about trading is human. Unless you run algos and whatnot. I want to remove all drawings, please. Thank you. Yeah, it's a human emotion that makes trading so difficult. That's the whole thing. So, yeah, I mean, I lean into emotion huge because I think, I mean, just because you have, even if your emotions are slightly unchecked, as long as you can manage risk, you're going to be just fine. Because at the end of the day, that's what every single trader is. I follow big macro accounts and I follow big technical accounts. And macro people make fun of technical analysts all the time, and technical analysts make fun of macro people all the time, because both camps think their style is the best, right? Both camps. But in reality, technical analysis is never going to predict what the price is going to do. But technical analysis can be used to give you a surefire way to manage risk. 100%. That's what technical analysis is for. To help you make those decisions, when to put on risk and where. Absolutely. In the macro, they're really, you're just basically a buy and hold investor anyway. And how many bearish macro guys have been wrong for the last 2 years? Right? I mean, it is very much a human emotion. Trading is. And that's what defeats 90% of traders. Risk management, letting their emotions get the better of them. Trading less is the best way to go. Let me read the rest of that comment. Hope the future is well for you. Enough has been on your plate. Happy to see you streaming again more regularly. Keep it up and thank you for it. Yeah, I mean, I stream every Sunday. I never stop streaming for the Discord community and the Patreons and all the channel members. Every Sunday I do a live stream for those, because those people have a financial incentive, right? So I gotta do it, even when my internet isn't the greatest, but it does okay. And if it can't, I can always just record a video real quick and upload it. There's nothing to it. I have recording software and I can take care of it, no problem. Keeping people in the know is the best way to go, and generally we've been bullish. There's no reason to be bearish just yet. If we do get the longer term rates, if they do continue to just sell off hard like this is going to probably cause a problem in the future. By them cutting interest rates, they're cutting the near term. You know what I mean? You can just look at the 1 month or the 3 month, and it'll basically show you like where the Fed fund rate is, right? So by them cutting rates, you're going to see that on these near term, but on the long 30-year, 20-year, 10-year, you're not. So for this to be going down, we generally want it to be. We don't want those near-term rates being a lot more than the long-term. So we got the 10-year, 3-month getting ready to get uninverted again. And to be honest, a lot of people are worried a recession is going to happen after, because that's generally when the recession does come. But we've already gotten uninverted on the 2-year, 10-year, or the 10-year, 2-year. So, and that just simply means that your 10-year is more expensive than the 2-year, which is good. That's generally the way we want to see it. But it has recessions do generally come after this. And we were inverted for a long time. So I'm not saying that the recession risk isn't out there. I'm just saying that people aren't really positioning for it just yet. And you will see it when they do start positioning for it. But the gold explosion, like a lot of people were thinking inflation was coming right back because gold was just blowing up. That ain't true. If you look at gold on a monthly and then just compare it with the S&Ps, you'll see that generally when the S&Ps is really, really bullish, gold tends to do pretty good. My comparison symbol won't come up for whatever reason, but there we go. I mean, yeah, there's times where the S&P sideways and gold does okay down here, but generally when the S&P is bullish, gold is pretty good. There's been times where it didn't. But I mean, this was after a big, huge bullish run, right? And then gold dropped off there for a little bit. But I'd say since 2016, gold and the S&Ps have done really good at trading pretty much with each other. So since 2016, one could argue that gold has been more of a risk-on component than a inflation component. Right? Because gold tends to get killed in bear markets too. So we'll see how the future does go, but hopefully it gets easier and the markets just stay bullish. Is that likely? Probably not, but Bitcoin is sure. All right, you guys have a fantastic rest of your day. There's only 4 minutes left until the market closes, and I'm not taking any new positions today. I really wish I could have got everybody in that Copart trade, and I really wish we wouldn't have gotten stopped out on this USD CAD trade, because I do honestly think that this thing is going to be trading down around the 137 area pretty, and that would have been a phenomenal longer term trade to sit in for a little while. But you know, it is what it is. We knew that this week was going to be extremely that. So the rest of the week, as far as I'm concerned, can pull back slowly and we'll be just fine. I still ultimately hold a bullish outlook on most everything. And now that tech is actually catching back up, we will be looking for trades on Microsoft. Apple is Apple's already pretty close to all-time highs. I think Microsoft is going to be the best one to look for a longer term hold on for right now, just because the all-time high is all the way at 468. That's almost a $50 move back up to that region. That trade is going to be a longer term trade, obviously. I'm not looking for that to happen in a day or two. But I couldn't get in it right when I wanted to based on this week. But now that this week is over, we'll see how it goes. We'll see if we can get, or the volatility for this week should be over. We'll see if we can get some pullbacks to support, and then we'll look to build in at least some kind of spread longs or something. I will post them on Twitter if I don't mention them in a stream or something. I think we've missed the boat on Tesla, unfortunately. I was trying to get everybody positioned at 250.08. We just missed it. It is what it is. It is what it is. Netflix has been making all-time highs, so Netflix is done. But I can remember doing live streams talking to everybody when Netflix was $200. And I was like, this is a buy opportunity. I mean, this thing's trading for $800 almost. AMD, I do believe it'll get bullish again because the chip sector is doing okay minus Intel. Intel's actually doing okay today. We'll keep an eye on AMD and see if there's an opportunity there. They did have bad earnings on the top line, but I believe that's probably done and over with. But we do need a pullback. We can't buy on big bullish days. We got to wait for bearish days. And we'll try to build a couple positions in some of these further off tech plays. Google gave us an opportunity to get long. It just played in this range for so long, it was difficult to hold. But it's starting to move now. And then Amazon is Yeah, it's all-time highs, baby. So there you go. All right, you guys have a fantastic rest of your day. No, I don't have anything at the close right now, Brian. I was just basically waiting for today to go away, then we'll look for trades. I haven't seen anything really that I love. I did look today. I didn't find anything. But, yeah. I'm going to try to get these streams going again. We'll see. On days I got good internet, I'll give it a shot. Thank you guys so much for being here. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.